You're listening to the Bitcoin Lawyer Podcast.
All right, everyone. Thank you very much for tuning in again. Joining me today, we have Eric Major. He is the CEO and chairman of the Latitude Group. Eric has decades and decades of experience in the CBI, citizenship-by-investment world. So, Eric, welcome to the show.
Hey, Adam, I'm really pleased to be here. Thanks for inviting me.
You're very welcome, Eric. I really appreciate your time. Why don't we start off, you can tell the audience a little bit about yourself and your involvement in the CBI world.
How many hours do you have? I'm an old dog in the business, as you well know. Just turned my 30-year mark in last September, so I'm quite pleased. And I would have never thought, as I was graduating from my master's degree, that I'd be I knew I was taking on this amazing job back in my hometown of Montreal at a bank called National Bank of Canada, which is not the central bank. It's just a commercial bank. And they had this division back in 1993 called the Immigrant Investor Program. And they were looking for a manager of that program that the bank was running in tandem with the government of Quebec, the provincial government that was following a federal policy that had been put in place in the late 80s. So I'll dive into that a little bit more in a minute maybe, but that's where it all started for me. And they grew into this latest iteration 7 years ago already of running Latitude, which I know you've been close to as well between your travels and your dealings in Malta. Yeah, really glad to be here. I'm happy to kind of, walk your listeners through the journey that's been truly amazing in this investment migration space. Absolutely.
Okay. Why don't we dive in and we can begin with that topic. So you've mentioned that you've been involved in this space since the early 90s. You've obviously seen the evolution of this industry, and we both know that this industry moves at lightning speed. If you just kind of had to give a summary, like what are some of the things that you've seen evolve over time within your career?
Yeah, I think I provide a bit of history, Adam, to kind of put the perspective on how I saw this evolve, again, going back to the early 90s, where in my homeland of Canada, the government had decided to engage the participation of the Canadian banks, the financial institutions, partially because they had offices abroad that would have clients who wanted to immigrate to Canada, but also they had offices and branches in Canada, and therefore they would help disseminate the capital, invest the capital pursuant to the government rules. And in my home province of Quebec, it's still to this very day, 30 years later, it still is a program that has the capital raised under the program going to the benefit of small and medium-sized enterprises, SMEs in the manufacturing industries. So I was, fresh out of school, helping at that time that important wave, even before China, which was Hong Kong and Taiwan, with the Hong Kong residents concerned about the handover that was going to occur in 1997, not knowing how China was going to manage that. So there was a big flurry of demand to Canada as well as to other countries, but Canada had this great program, 350,000 Canadian dollars could get you permanent residency. And then here I was taking that capital and going to these small villages of my home provinces and lending it to these companies that were in the manufacturing industry. And for those companies, this money was basically, lent to them at what at the time equated to about 4 or 5% less in terms of interest rate cost than what the bank would typically be lending the money out. So it was cheaper lending. And so the companies were happy. The foreign nationals coming to Canada were happy to becoming permanent residents. And the bank was making a nice little margin in between. And I thought, an exciting and amazing concept where everyone wins. And I just grabbed that program. I had a lot of success, both in sourcing clients and delivering the capital. In between, I met who is now my wife, who was at the time living in Vancouver, and we moved from Quebec to Vancouver. And wanting to continue this, the only bank that's actually base in the west coast of Canada is a well-known bank globally, but in Canada, it was HSBC. All the other ones were out in either Toronto or Vancouver. And that's where I had my really next big opportunity to continue this wonderful business of helping private clients become Canadian residents and then allocating the capital, which at the time in that province and the other provinces, the money went into these immigration funds. And later, all that got centralized with a federal fund. The point here is that at that time, there was really just the Canadian banks dealing with the immigration lawyers with this. It was so successful, Adam, that the Americans say, hey, wait a minute, this is a good idea, what these Canadians are doing. And they came up with their version of this. So Canada was first in market with the Canadian Immigrant Investor Program and the Quebec Immigrant Investor Program, both of them, in fact. And then the U.S. came up with its U.S. EB investor visa back in 1990. Then, of course, 4 years later, what the Americans and Canadians have done successfully, the Brits came up with their version of it called the Tier 1 investor visa. And shortly thereafter, Australia and New Zealand. So for a good decade, it was an Anglo-Saxon concept of trading residency for an investment. And so, if you ask me what's changed, it was obviously a lot less crowded back then. So just 3 programs, certainly Canada first, and then the U.S., and then the U.K. And frankly, the U.S. had its bumpy beginnings in this, just like Canada did, and then the UK as well. By the time that my partner in crime, Ken Ng, who's this immigration lawyer that I had the fortune and the privilege of developing programs for countries, including Malta and Antigua, but our first foray was coming to meet the Home Office in 2003 and brought some provisions to their then investor visa. And at that time, when we met with them, they only were doing 30, 40 clients or applicants a year.
Was there a quota put out by the Home Office at that time?
At that time, there wasn't, but there kind of was insofar as, they had a much higher investment threshold, which they established at £1 million.
Right. Okay.
That's the Canadians were doing it at 400 at that time. And then the Americans had their 500,000 regional centers.
Right.
So you could say that the Brits had outpriced themselves, but that's where we came in. We said, well, there's an opportunity here because in Canada, we allow the applicant to borrow money to make the investment. And £1 million is something that we could lend against if indeed the investment is a government bond, which is what 98% of the clients were taking. So that's the idea that we brought, Adam. And the numbers went from 30, 40 a year to 300, 400 a year the following year. And it just took off because we brought in the ability for the applicant to borrow. So that was really, where things started to take off. So by then I'm at HSBC. I have on my shelf a thriving Canadian program, both Quebec and federal. We have offerings through our channels in the United States. We had launched the UK. Then I bump into this guy named Chris Kalin, a Swiss national who was doing this type of work in Switzerland, helping private clients become a resident there. He was also active in Belgium and Austria that had similar provisions, not anything of scale at the time.
Okay.
But then he mentioned that he had a great idea that he was developing in the Caribbean, which wasn't to bestow residency, but outright citizenship against an investment. And I thought, wow, that's obviously the next frontier, right? I mean, now it's not just a residency card or even permanent residency like we were having in Canada, but an outright passport and citizenship.
Can I ask just to give a time frame? Because I know like St. Kitts, they had their program since 1984. And so like there already was a Caribbean
provisions. There was provisions in the law since 1984, but from 1984 to 2004, that 20 years, I would be exaggerating if I said they did 30 clients. They didn't do any scale. There was no scale. It was this obscure provision in the law that only had a few people apply. There was nobody marketing it. And his credit, like he thought, let's do like the Canadians in institutionalizing this. and structuring and framing the offering in a predictable and scalable manner. And that's where in 2004 and 2005, he was launching basically a donation route. And the SIDF, the Sugar Industry Diversification Fund, was launched to help the economy shift from the sugar industry to tourism and higher value activities. And the SIDF was the key instrument to make that transition. Chris, having launched it, needed partners, which I guess HSBC he viewed would be a good one to get this program some traction internationally, although he was at Henley and Partner, and already they too had a pretty decent network. So we collaborated, and well, that's maybe the topic of another show. There was a lot that ensued from there, but that's where it really took off, Adam. I mean, 84 is the provisions were there, but it wasn't until 2004, 2005 that the St. Kitts CBI is what it is as we know it today.
Okay. Yeah, I had always heard, St. Kitts has always branded itself as sort of the gold standard, and they always sort of touted since 84, but I was unaware of the back history that there was sort of that 20-year gap where things perhaps, like you said, there was no real promotion of the program. So I was unaware of that. I appreciate the history lesson.
I think the turning point truly to the industry really does start with the Canadians, because they had brought the participation of the banks. The banks are highly structured and almost
regulated.
Exactly. They're regulated players. There's always a right way of doing things, very engineering in their structure and their processes, which is a good thing when creating policy. That was why the Canadian program was successful, and later the UK and what we brought there. And that's really what Chris did at Henley. He brought that concept of framing it both in law and in regulation, but more importantly, in process and procedures. And really, when you get into the crux of these government advisory mandates that in other firms may be chasing from time to time, the key success to these programs is very much the agency, the unit that is meant to receive and review and vet the applications, and how they do that work and what level of care they bring in doing that work. We talk about the 4 tiers of due diligence. Those are concepts that Chris and I brought over, certainly to Antigua and then later to Malta, and that continue to prevail today.
Can I just ask, so coming from a banking background, are you talking the same type of tier structure that you would take on for lending to an investor? You brought that type of due diligence into the CBI world. Am I understanding?
Very much so. There's certainly a due diligence side to the equation, which I'll admit was something that existed in banking, but certainly it got a lot more serious after the financial crisis, okay? You know, where the regulators around the world started really looking at, you know, how good are the banks in doing what they're supposed to do by law and by regulation, which is their source of funds, source of wealth, anti-money laundering procedures. And so that whole needle went from, you know, pretty neutral to low to high gear after the 2007-2008 crisis. So I'll say that at the early stage, certainly in Canada, the participation of the bank was really sought to help the country or the government have the banks allocate the capital to where they wanted the capital to go, which in my home province was SMEs and manufacturing. And they thought, you know, governments don't have offices in every little nook and cranny of the provinces, but banks do. They have branches. So that's where it made sense to partner with the banks. But later, even more so, made more sense, because then you got this whole, we need your help to vet them and to do the source of funds and source of wealth exercise. So it was very symbiotic relationship that grew. But even for those countries that didn't start that way, that whole DD side, process side, step 1, step 2, step 3, you can't pass go unless you went to steps 1, 2, 3 before, to use the monopoly analogy. So it was that both brought credibility to the program over time and allowed it to provide scale. So you're not in the world of just 20 clients a year, like, the first 2 decades, but you're in the business of 20 clients a month or 20 clients a week. And to do that professionally, you need a proper system in place, which the CIUs and the agencies are really what we were developing as the key gateway for them.
That's a really good point. And, I think it helps listeners to sort of develop that history because, I would consider myself fairly knowledgeable, but it's always nice to sort of learn these, little nuances. So I'd like to kind of jump a little bit to the present. And I just wanted to talk a little bit about the current state of the CBI world. Without getting too into details, the last, let's call it 7-8 months since the signing of the Memorandum of Agreement, the MOA with the Caribbean countries, has really changed things. We've had new players, new countries come out. I just kind of wanted to get your take on all of these changes and what you think, kind of looking back, what things were like 2 years ago, how you would look at the industry today.
Yeah, in many ways, there are some similarities with the journey that we did experience again in Canada. And I'll just share very quickly to answer your question. All the steps that have been taken in these discussions and negotiations that took place with Brussels, with the United States, with different departments and stakeholders have been in the main for the good of the industry. Because what happens, like in any competitive environment, you'll always have somewhere a looser link than the rest in trying to compete. Yeah, and isn't that just the market always plays that out over time? And frankly, let me say, we saw this in Canada. There was a time where every province had its immigration fund, and they too were all trying to attract both the migrant to their province, but also their capital to their province.
Wait, let me take a stab. Let me take a stab at this. It was the Newfies going rogue, right?
The Newfies went a little bit rogue, and then, but you even got the Northwest Territories and Yukon that got into the game, and it was what would now sound like the Wild Wild West, because it was the early days of the industry and the program. But the point is, there too, along things like the loans being provided to help the applicant make the investment and the competition around that. Now, it was still framed within a banking world, so there was still some structure to this, but it was being commoditized. Let's call it for what was happening. And so that's when the feds came in and they said, we're going to centralize it, and there's going to be one funnel, only one program, the federal IEP, and whatever that program raises will distribute the capital to the provinces, and they could do what they want. Now, what's the analogy? Well, the analogy is, if I may suggest to your listeners, that the next step to this whole Caribbean story is going to be a centralized due diligence and agency exercise that's going to still have foreigners apply and say, oh, I want St. Lucia, oh, I want St. Kitts, oh, I want Dominica. But the actual, call it 4-tier due diligence, is going to be harmonized in one regional play, just like we had at the end one national program. Then it gets allocated to wherever the client said, I prefer to go to or to have. So this is what's next. And that's the pressure the Americans rightfully and Brussels rightfully are saying, you guys all sing a certain song, but you're not all dancing equally to it. In your own way, some are taking it more seriously than others. For example, when you say that you're not going to take on applicants who may have been refused previously
From somewhere else.
a visa from somebody else, then you gotta do that or not do that. And there's been countries, I won't name, that got their hands.
We don't need to point fingers. We don't do that on this podcast. We speak in general terms about the industry.
Yeah, same around nationality restrictions, what's allowed, what's not allowed. So the point is that there was some loosey-goosey activity, and this is where external forces are saying, let's bring back and raise the bar again. And so I think we're going to see the evolution of that, like we saw in Canada in the early 2000s, where all that gets centralized, and then there's no more of that competition. Certainly not on the DD side, right?
Now, can I ask a little more if you're okay with talking about that? Because this is the first that I'm hearing of this. So, I mean, I don't know how much you want to get into this. I'm not going to, drill down too hard on this. There have been, shall we say, possible rumors that I've heard of potentially one CBI country leaving the MOA. So the idea of them creating centralized processing unit, if you will, or a centralized due diligence unit for all countries is interesting, because I was speaking with another guest and we were discussing the immense backlog that has built up as well. Like everyone trying to get in, basically the doubling of prices last summer. I don't know if how much information or what you can't say about this, or is that just speculation? I don't know if you can expand on that a little bit.
Yeah, listen, it's I hope it's not speculation. I'm referring to it on the basis of an actual tender that was issued literally just before the holidays, that was looking for the OECS governments were looking to retain a lawyer in the most part to draft and frame the new regulatory provisions that would line the due diligence procedures that all 5 or signing countries adhere to. So that's where I'm getting my read on it. I'm getting it also on the back that I know there's a lot of frustration from Brussels and in the United States around some loose cannons, or let's call them broken links, so to speak. And so this is the natural to me, seeing what that tender is asking to achieve, and these forces at play suggest to me this is where it's going. And frankly, it's what we saw happen in Canada, because again, there was arbitrage where certain countries, we knew that if the client was of ABC background, could have a better chance going through that door as opposed to the other doors. So that's where I think it's going to eventually go. They already have elements of this, Adam. They got this regional JRCC system where they're supposed to submit all of their cases for a secondary review by this regional oversight group. So that was sort of like the beginning of that. And to be honest, not to say I have the pulse on everything, but I had not heard that there was one of the 4 or one of the 5 OECS countries wanting to break away. But that's not to say that that's not likely. Frankly, I don't.
Again, everything is conjecture. Everything is a rumor. Nothing 100% confirmed. Just saying that there's rumors. That's all I'll say is what I have heard. I mean, like you mentioned, there's sort of the centralization. I know St. Kitts also opened up a European office for continued due diligence, I believe, end of last year, or at least they were talking about starting one. I'm not sure if it actually got off the ground. I know they did name a director of that office.
Yes, indeed. And there's also other interesting initiatives that tie beyond the DD side, which is kind of re-engaging with these vast numbers of recently minted citizens, or even over the last decade, in trying to re-engage with them to get ancillary business. And I know you and I were talking about this at some earlier stage last year around how some of these countries are also looking at creating ancillary programs that kind of link to the CBI, but then it could also attract them to become resident and tax resident if they meet some other criteria. Yeah, there's that going back to your earlier question, the evolution of the industry is certainly not static. It ultimately, by the insatiable growth of demand around the world, what was for the early part of my career pretty much an Asia reality with Hong Kong and then Taiwan and South Korea, and then the massive wave we got from China, then the Arab Spring, obviously with the Middle East always there, and then even the Russians had their moments. And guess what? All that is now supplanted by the Americans, who are also lining up for this. I've had the privilege of over 30 years to see that evolution and realizing that from the East, the Middle East, or the West, RCBI is a solution, is an offering that anyone of means should be and is now starting to pay attention to.
Yeah, definitely. But I've seen programs close. I tried to get an Armenian permanent residency in, what was that? Like May of 2023. And I believe the law changed in July or August. It was right before I was moving to Malta. At that time, to get permanent residency in Panama, all you had to do was put $5,000 in the bank and then have what they called an economic tie. You could essentially buy an off-the-shelf corporation that was already prepackaged, and that was your economic tie. So all in, we're talking less than 7,500 US to get permanent residency. And it's now, as of the beginning of 2025, it's now a $300,000 real estate investment under the Friendly Nations visa.
Exactly.
So, I mean, you're looking at, how many fold is that? At 60,000 or like, no,
600 times.
Yeah. Sorry.
It's a big increase. You're right. And I remember those days where Panama was churning quite a few applicants who were seeking PR that way. And that's an important aspect of our business, right? The supply side does evolve, does change. UK had a program, it no longer does. Ireland had a immigrant investor program, it no longer does. Federal Canada had one, it no longer does, although Quebec keeps its own. Spain is about to release its program, which is a shame. We almost lost Portugal, but in the end, they saw the light and saw that it was worth keeping with just taking out the real estate option. Similarly, others have been added. The Middle East is getting into this. You have programs of this nature now in Oman and Qatar and Saudi Arabia and UAE, Jordan, and of course,
Egypt has a CBI program that isn't discussed that much as well.
Yeah, you're right. So, I think that's fine where the countries may have a need at first, which then gets addressed by the policy of a golden visa, but then 5 or 10 or 15 years later is not as necessary. Certainly, that's the case with these real estate programs that Portugal had, for example, and then they saw pricing pressure and they figured, okay, well, the smart thing to do is to not kill the whole program, just simply say, well, we won't have the capital go in property. And have it go somewhere else, which is exactly what Portugal had done. But it's sad to see that the Spaniards haven't taken the same approach.
Well, so much of that is just based on kowtowing to the European Commission. I know when you and I met last year, I was in the process of finishing law school, and I ended up writing my master's thesis about Malta's CBI program and basically sort of the history of Malta versus the EC, European Commission. And, luckily, I submitted my thesis middle of September, and I think it was 3 weeks later that the Advocate General of the EC actually came out with their statement and sided with Malta and basically said, look, based under the treaties, as it stands, member states are allowed to bestow citizenship upon whoever they want. That is a member state function. It is not within the purview of the European Commission to try to dictate who can have a CBI program. But, we had Cyprus shut theirs down and Montenegro trying to be, an ascending member to the EU, pretty much buckled under pressure too. So these programs do go away, as you said.
Some do. And to be honest, not that I have a crystal ball on this, but I wouldn't be surprised if some go away, but some may also make a comeback, because to the point you were just raising with the Advocate General's amazing opinion, and let's be clear here for your listeners, we're really just days away, I believe, from what I understand will be a January or certainly no later than a February event, whereby yes, the Advocate General gave his opinion to his fellow European Court of Justice judges.
Correct.
weighing his legal view on the matter of Brussels versus Malta. And we were all very excited about that. But the actual decision is any day from now. And we're hoping that the fellow judges will indeed follow Advocate General's opinion on this, as we're told typically occurs 60+% of the time. So I will be cautiously optimistic, and not more than that, but cautiously optimistic that indeed we'll win this case. And then what does that mean? If that happens, we now know that there's no illegal hindrance to this business, that it is indeed member states to decide how they mint and naturalized new citizens. And I think the next battle by the European Commission will be therefore, okay, well, then we got to regulate it. We got to frame it in a way that we ensure it doesn't have any loose links or back doors. So that, which is fine for serious players like us, and we'll be looking forward to seeing further regulation like in any credible industry. So fingers crossed, but it's looking quite favorable, Adam, I would say.
Yeah, absolutely. To be honest, I knew that was coming, but I felt so confident once I read the opinion of the AG. I just I told you so, because if you read the treaties, that's what it's there. And there's so much case law that's built around that, around member states being able to control the citizenship, and then how EU citizenship ties into that. But that has always been at the member state level. So I'm just going to call it now. My personal opinion, I don't think it's worth losing any sleep over that. I think Malta's got this in the bag.
Well, let me just say I got the champagne bottle in the fridge, but I'm looking forward to popping the cork.
All right. Good to know. Wanted to shift gears a little bit. I'm pretty involved in cryptocurrency. We like to talk about crypto on the show. We like to basically talk about the crossroads of cryptocurrency, particularly Bitcoin. We do distinguish between Bitcoin and all others, but also look at the legal aspects and the CBI, RBI world. So actually just looked at CoinGecko. Bitcoin's trading at 102,550 as of today, January 17th. We saw an all-time high, I believe it was December 14th, of 108,000. We're in a bull market, kind of seems to be moving, almost a crab market at this point right now, where things are kind of moving sideways, not really going up or down per se. But I wanted to ask, what are some aspects that you see with cryptocurrency making a comeback in terms of not just popularity, acceptance, but, increased the value and people becoming basically newly minted millionaires in many cases, and then sort of looking at how to diversify this new wealth in the CBI program? How have you guys seen that develop?
Well, certainly, yeah, it's a good question, Adam, and it's really an evolving story, which is fascinating to witness and to follow, because this Bitcoin and cryptocurrency world is one that's still very much evolving. I'm kind of equating the era in which we are in right now to maybe much earlier than you'll remember, but I remember 94, 95 with the advent of the internet and the AOL.coms and the first search engines, and you had Netflix and Ask Jeeves and Lycos, and you don't even have Google or Yahoo at the time, and there was
Eric,
all
I
these...
remember CompuServe.
You remember? Okay, cool. I'm okay, cool. I mean, but yeah, but you see how no one could have really fathomed how it would play out. Although we know who won at the end, with Yahoo representing over 90% of the market. We know indeed, and so there too, I do sense there will be lead winners, and Bitcoin obviously likely to be that in this space. And let's face it, private clients are, and have been over certainly the last 5 years in particular, amassing more and more cryptocurrency as an asset class. And they're doing it for all the right reasons, for diversification, for hedging, and frankly, as you just say, at a good yield. I mean, look at the good yield that Bitcoin, I think I looked on the internet this morning, is yielding 165% over the last 12 months. Now, it's not to say it's going to repeat that every year. We know that, but it's
Actually, 140.3% over the last year. I just looked it up.
Okay, well there you go. You got a more scientific level, but it's a triple digit story, and I think what we're seeing is also we're going to see the whole adoption challenge slowly but surely becoming overcome. Because I remember having these discussions with the government of Antigua and Eric. I could receive Bitcoin, but I can't build a bridge with Bitcoin. I can't pay my employees with it. So it's still very much you got to convert it back to fiat so they can do what they would want to do. But what technology is slowly but surely bringing are these platforms and these layered solutions that will allow you to just show it with your phone and pay for that Starbucks, right? In fact, in some parts of the United States, I know you could already do that. So adoption is going to increase over time. Governments will also start to store it as a reserve asset, like El Salvador is doing. And
I mean, look at. Oh, I'm sorry to interrupt. I just wanted to interject. I mean, there was a court decision just a week ago, last Friday, where the U.S. Marshals are talking about selling off over, or almost, it's like 69,000 some odd. It's almost 70,000 Bitcoin from the Silk Road seizure, and they're almost trying to get it out the door. But I can tell you, I worked as a U.S. civil servant in D.C. for more than 10 years. These things take time. You cannot just set up a sale and have, bidders the next day. But it seems that they're trying to position this sale, before President-elect Trump comes in just on Monday. We're literally 3 days away from his inauguration. So
there's promise with him and his entourage around, I guess, creating a framework for crypto to have its place more and more in the United States. How that's going to play out, I'm not the expert or close enough to understand, but all it tells me is there's this dynamic of wealth creation, an asset class, adoption is going to increase. Central banks are going to hold it just like they hold gold, just like they hold yen and euros, and of course dollars. And once that confluence continues and reaches what I think they call the tipping point, then it's here to stay. But like 1995, with the advent of the internet and the search engines, well, there'll be winners and losers in terms of who gets over that tipping point.
Yeah,
that's where I find it interesting. So that's where we're not sure of the story, but to answer maybe indirectly the question around how does this play into our space? It plays significantly into our space because our clients have this asset. Certainly to demonstrate their wealth, it's part of the equation. To maybe even pay for the donations or the investment, it's a reality.
Yeah.
Anything that we're proposing in terms of government advisory to launch new programs has a crypto solution, a crypto platform that would allow applicants, just like in El Salvador, to pay for the program features this way. So I think it's a cool addition to the overall money space, currency space, asset space. But it still has ways to go before you actually buy a car with it or a Starbucks with it, right?
I would definitely agree. If you look at what the white paper talks about, it talks about a peer-to-peer e-cash system. So it's not this idea necessarily of going to merchants. It was this idea of being able to pay between private individuals as a way to, increase commerce. And obviously, to scale that, you do have to obviously bring in industry, you have to bring in business for it to sort of reach mass adoption. I mean, that makes perfect sense. I would definitely like to see more countries like what El Salvador has implemented in terms of their monetary policy, even if they kowtowed to the IMF recently and with their loan, because they actually removed Bitcoin as legal tender. People are not obligated anymore in El Salvador by law under this new IMF loan condition to accept Bitcoin. So, I mean, it's a little bit of a back step, but it's still, widely accepted. Actually heading to El Salvador in 2 weeks for the Plan B forum conference that the Ghana Plan B is hosting. Get a chance to check out how Bitcoin is actually being implemented there on the ground.
Yes. Interesting. Very interesting.
I wanted to move to another topic. You discussed your history in banking, and I know from an academic standpoint, you studied economics. I believe you have a bachelor and master's both in economics.
That's right. Yeah, indeed I do. Economic armchair economist, as I say.
I just wanted to kind of ask, looking at this from an economic standpoint, the industry, what do you think are some of the pros, which I think we can both probably name quite a few.
Yes.
But
Yes.
I'm curious if there's any economic cons, because, like when we talk about a price point, anytime I talk to someone who's not involved in the industry, has zero knowledge, right? You start throwing out numbers that begin with six figures. We start getting into some of the other ones, and they are seven figures. And most people's eyes just could glaze over, and they're like, I don't have that much money, So I'm just curious from an economist standpoint, coming from banking, economic background, what do you think are some of the pros of this business? And then possibly what are some of the cons?
Yes. Good question. And one that has a lot of important nuances to reflect, because I'll give you, again, close to my heart is the experience in Canada of both the federal immigrant investor program and the Quebec immigrant investor program, but then I'll dovetail into Portugal and into Malta, because I could give you both the pro and the con with those four. Pro was the Quebec program was a great source of capital to provide to SMEs at a discounted rate. That's still the case today, so that's still a pro. The federal program was basically offering foreign nationals a guaranteed 400,000, later 800,000, and then later 1.2 million Canadian dollar bond, but at no interest. And guess what? That made a lot of sense in 1992 and 93 when I was in this business, all the way up to 2001 and 2. Where the interest rates for Canada to borrow money, 5-year money in the market, would have been 8, 9, 10%.
Yeah, I was just going to ask, like, what were the interest rates then? Because I know at least in the U.S. in the early 80s, I think they got up as high as 18%. Like a treasury bill was somewhere maybe even 20, but I can tell you where we were in like the early 90s.
Yeah, no, it wasn't as high in the 90s, but it was still high, and it had its steady annual decline to the world that we have lived in. 2 and 3 and 4% money for 5-year money, both for the U.S. and Canada. So, but when these programs were launched, the interest rates were higher. It made sense to say, oh well, Mr. Wong or Mr. Smith, we're going to give you this great thing called a Canadian permanent residence card, what Americans call a green card, but your opportunity cost is your money is not going to yield anything. Well, as time grew, that wasn't bringing as much economic benefit. So that's where it became a con. And rather than kill the program, which is what the Canadians did at the federal level, they should have come up with a revised policy, which, by the way, to give the credit to Portugal, that started its program in 2012. It was purely a residential real estate play. And then they realized that prices were going up. So they regionalized and gave it benefits to investing into property outside the major city centers. And they added other investment streams. And then even that didn't abate demand. So then they took away the real estate option and kept the others. But they didn't kill the program like the Canadians did, right? Although Quebec, again, is a province, but some would say it's its own nation, and that's why they still have theirs, because it's still yielding benefit to the manufacturing industry in Quebec.
Correct me if I'm wrong, but I believe that Quebec does have autonomy when it comes to immigration.
In terms of creating such programs where the province will get the benefit of both the capital and also the individual. But it's still, because it's part of Canada, there's still a federal level of scrutiny where they check the applicant on medical grounds as well as security grounds. But they could create their program as they had and maintained it for 30 years as they have. And it continues to be a relevant program. The Feds got lazy and they didn't update it or revise it. And the Portuguese did. They have refined it. Spain was a great, and let's be clear for everyone who's listening, I'm sure agree. In 2012, Portugal and Spain and Greece were on the verge of fiscal bankruptcy. I mean, the IMF came in. The whole question of the future of Europe was very much in question with those three. And you could add Italy to the mix as well, being on the brink of honoring their debt obligations. So they had to implement these emergency measures with it, which in the case of Portugal, I was closer to. It was a variety of different measures, not just golden visa. They had this non-habitual tax regime as well that they brought in. All of this brought the world to say, oh, that's interesting, and apply and invest. And frankly, within 3 years, they were able to turn around that predicament. And some would say so much so that that's where we saw pricing pressures bring a pushback in, and that's why the real estate component was taken away. But make no mistake about it, at the time the program came out, there was all these properties, all these projects, all these hotels on banks' balance sheet for values less than the mortgage that the banks had on them. And the whole thing was a mess. And I won't say the golden visa was the only thing that helped, but it sure was a strong impetus. So my point, you talk about being an economist, I've always loved this business because I know the value of capital. I know the value of good policy. I also know that time makes a good policy maybe less good over time. And that's why you have to revise it.
Well, it seems to only be that perhaps when good policy is passed and then things are working, governments seem to step in and say, oh, we need to retool it and let's do this and this. And then they end up shooting themselves in the foot.
Exactly.
At least that's what I've always seen, is they get in the way of their own success sometimes.
Yeah, no, and they become the victim of it, indeed.
I mean, that as well.
Yeah, indeed. Would no one in Malta today, 10 years hence from launching the program in 2013, 2014, would argue whether the MIIP and now the MEIN, as it's called, basically Malta's citizenship-by-investment program, would have, whether there'd be any debate whether it's brought any significant impetus and economic benefit. It has. In fact, every citizen on the island received a dividend check during COVID, and people's salaries and incomes were protected in many cases through it. Of course, they've also used the capital to enhance what is really necessary on these islands, Malta included, which is infrastructure and roads and hospitals and schools. So all of this, 1.6 billion euros unfeathered capital cash that is not required to be returned to anyone for a nation of 500,000-600,000 people.
Yeah, I think it's right around there.
Yeah. So, that is what we call transformative, and it pays for a lot of things that otherwise your citizens would be required to be incurring a tax burden to achieve.
I was just going to add, it's not just so much the direct capital, but there's also the indirect capital of the property market, because there is a property purchase or rental component to the CBI and the permanent residency program. So whether or not someone lives there physically, they're still supporting landlords. And should they choose to live there, which most likely under the permanent residency, they're buying things at the grocery store, they're patronizing other businesses, they're going out to eat at restaurants.
Yeah, no, listen, not to bring up classical economics 101, but GDP equals C plus I plus G. C is consumption, I is investment, G is government expenditures, and the level 2 course, so that is plus exports minus imports, but just keeping it to C plus I plus G. So this program brings an injection under the I, and also to G, because a lot of that money does reach government as well, not just to investments in infrastructure and the like, which in the case of Malta. So in Malta's case, it's very much I plus G. And now they're realizing, but let's try to get more of that C, that consumption of the guy coming over, enjoying not just 2 weeks, but maybe 2 months in Malta. So there's an impetus around that. Same with the Caribbean, certainly with the American market, where there's a higher propensity for the American guy to enjoy a few weeks in Antigua than maybe the guy from Bangladesh. who's also gotten Antigua citizenship. But certainly for certain markets like the US, like Canada, like the UK, you will see in the decade ahead a lot of competition by, for example, the Caribbean, vying for that that consumption, getting that guy who's gotten citizenship to spend some time on island, which frankly is an attractive proposition. But make no mistake about it, to your point, there is ancillary with the I and the G happening, and that's how you grow a GDP. And that's what these programs have typically been designed to do and have achieved it. Where there's been failures is in revising where the I goes. Like, is it real estate? Okay, that's fine at first. Maybe you have to revise it. Maybe you put it into funds. Maybe you put it into debt. Maybe you put it into infrastructure, whatever it is. But it has to policy.
Absolutely. We did touch on the topic earlier that just the industry in general, like requirements change, investment amounts, filing requirements change all the time. These prices go up and down. So, obviously government policy is going to be reflective of that. So yeah, that makes perfect sense. I know we're getting a little close to our time, so just want to be respectful of that. So I would like to close this out. We've covered a lot of topics, but I just wanted to ask, we're starting a new year. Many things I think are evolving in this industry. So I just wanted to ask, if there's anything that we haven't discussed that you think the industry is heading in a certain direction for this year or possibly a few years down the road.
Yeah, no, listen, thanks for that. I think putting my chairman and CEO of Latitude hat on, I would say we're very excited by the opening and advent of the U.S. market. There's a lot of political risk insurance being purchased over there now, a lot of Plan B and also lifestyle discussions happening around what these programs could offer. So that's still a relatively recent development, one that I'm glad to. We're very keen on being close to. We have our presence in Denver, New York, Miami, as well as in Canada nearby. And we're going to expand our presence in the United States to service Americans and North Americans in particular, because I do think that is to bring the parallel of the first 2 decades of my career where it was all about China. I think the decade ahead, if not 2, is going to be about the United States. And simply because that's where the wealth of the world is. There's more millionaires there than anywhere else on planet Earth. Americans who have been blessed with their lovely country in 50 states are starting to realize that maybe having, an insurance plan and a policy to be able to explore and live and have a footing in another part of the world would be sensible and like just what's going on. So I'm excited about that. That's an important development, which is really going to feed the next decade or more. I think from the Latitude perspective, we're really focused on bringing to market at some point. We've been working hard on this, but we hope to be able to bring a new program to market. We're working on a few. Yeah, it is exciting. I mean, it's always a hard task. The political constellations have to be there, particularly when it comes to citizenship by investment. It's highly politically charged. There needs to be a strong government that says, yeah, we want to do this. But we're hopeful that 2025 will bring an important development for us on that front. I think really for us, it's all about North America and the U.S. in particular going forward in terms of where our sites and the government advisory piece. That's really where at Latitude what we're going to be focusing on. I think beyond that, in terms of other things to cover within the industry, I think, again, we're fortunate the demand side is growing. It's always been there, but it continues to grow. The challenge in our business is just keeping track with the supply side, what is entering, what is leaving, what is changing, right? Policy changes, thresholds, this, threshold, that. I think my sense, though, Adam, is we are turning a corner. I don't know if it's because of the MOA. I don't know if it's also because maybe the Advocate General's opinion, but I sense we could finally be turning a corner where the supranational bodies and geopolitical stakeholders come to accept the existence and reality that RCBI is, and the importance that it is to nations who develop them, and that the way to go around this is maybe framing it and regulating it and enhancing due diligence. And we saw that in the last decade. The DD side of the equation has improved and will continue to improve. But I think I'm cautiously optimistic that we're turning a corner and that we'll stop being beaten up by these bigger countries and geographies that have a moral and psychological reservation on the idea.
I would almost say they have a moral superiority complex because they do definitely sort of seem to punch down and bully some of these smaller countries that have obviously moved from one form of revenue to a different one. You mentioned from the Caribbean countries, from sugarcane to tourism, and have now become, I wouldn't say entirely reliant upon the stream of income, but, you start to build a track record of, say, 10, 15 years, and you're like, okay, well, let's keep this gravy train going as long as we can. So, that's at least what I've seen, where some of these mostly financial organizations, and we won't point fingers, but again, we know exactly which four-letter one I'm talking about. Basically try to shame countries and economically bully them. And it's honestly, in my opinion, disgraceful. But,
it is. I sense that we could be turning a corner. My colleagues in the offshore international trusts world remind me that they too, in their evolutions from the 60s, 70s, 80s to today, went through a very bumpy ride of legitimization and regulation. And so those industries went through a difficult journey, which no less we've come out of and still continue to dwell in. But I think we're turning a corner, and that's positive, but it's not to say that the detractors are not there. They remain there. There'll always be people who challenge the moral compass of what it is this is and what we do. Guys like you and I think we're preaching to the converted. We know the powerful impact this has on individuals and countries. And maybe this is the last bit to this point, because we used to always, even in Canada, it's all the Chinese or it's the Middle East or it's the Russians. But guess what? No, it's the Canadians and the Americans too, and the Brits, who are saying, I need this other country. I need this other residents. And it's not just the other guys.
We're both North Americans, but as I said to you, like when we first met last year, during COVID, Americans, we were so restricted from going anywhere. There were so many countries. I actually, I had planned to try to move to Poland, where my family historically is from. At the beginning of 2020, I actually made a New Year's resolution. That was going to be the year that I finally moved to Poland. I hired an immigration lawyer, was working with him, and 2 months into that, beginning of March, the world got sideswiped, couldn't even get a visa. And even if I had gotten a visa, I wouldn't have been allowed in because I wasn't an EU citizen.
Yeah, COVID did change a lot of things, certainly not just to our industry, to the world and how we work and how we prepare for the next big events. But in your case, this is, it's good that you continued that journey just into a different jurisdiction. I know you're spending time in Malta. Are you still traveling between the States and Malta and elsewhere, or where are you mostly hanging out these days?
I am actually based out of the Philippines these days. Yeah, Philippines, wonderful jurisdiction. If you have a Western passport, you can come here visa-free, and you can extend for up to 3 years as a tourist. And then they essentially just ask you to leave the country, and you can then re-enter, and the clock starts over again. Yeah. If you're a tourist, there is zero tax on remittances to the country. If you become a citizen, you then have to pay tax. But if you have PR or if you're a tourist here, zero income tax.
Interesting. Wow.
And the Philippines also is not a member of CRS and has great bank privacy rules as well. So that's another thing. about the Philippines that I don't think enough people talk about. But
No, it's a really cool place. I did business there in my earlier career. I always loved Makati area there of Manila, and some of these beautiful islands that they have. These holiday resorts are amazing over there. Well, listen, I'm glad that you're in that part of the world, because that's really exciting. Do let me know when you're next in Malta. We should try to connect.
absolutely, I will wrap up. I just wanted to say again, Eric, thank you very much for your time. It's been a pleasure speaking with Eric Major, the CEO and chairman of Latitude Group. For more information, you can check out their website, latitudeworld.com.
Yeah, no, really appreciate that, Adam. It was a really interesting conversation. Thank you for hosting me.
Thank you very much for your time, Eric. Thank you. Take care.
Thanks for listening to the Bitcoin Lawyer Podcast. For more information, please visit our website at www.bitcoinlawyer.com. And remember, Bitcoin Lawyer is your legal bridge between Bitcoin and freedom.